Grants for the self-employed, the SEISS, Self-Employed Income Support Scheme. Are you eligible, and how will the HMRC, the taxman, check? That's what I'm going to look at in this video. I want to see what you can do to protect yourself and just to make sure that you've claimed the right amount and not too much money. Now in this video I want to go through a little bit more detail than I would normally do. And I've got to be careful so that you understand, the basis of it. It's not advice as such. I'm trying to point you in the right direction so that we're your accountants, you can ask the right questions about what we should be doing together to protect yourself. But if you do your own tax return, it's something where you can look and research the pointers that I'm giving, or if you've got a different advisor, then you can also ask with them as well. I do regular updates on tax and accounting, so if you want to be kept up to date, then please subscribe to the channel, press the like button. It really helps me and helps the channel. If you've got any comments on our website, you can put sort of detailed and personal comments if you've got something you want to ask me. But if you've got comments of a general nature, then please put them in the comments section below. Nobody wants a tax investigation. So let's first of all think about how you can protect yourself. So on the tax return, there is a rookie error that you can make because you have to put the grant separately on your tax return. So you want to do that. So if you received a grant, make sure you put it in the right place, because that is a bit of a rookie area, and I would have thought the revenue are going to be checking that and will raise an inquiry if you don't put it in the right place. But I think you can do more than that. Oh yes. On the tax return, there are actually quite a lot of blank pages where you can add additional information. Now, for some people, it's not obvious that you are eligible. It's not obvious that your business has been adversely affected by the virus, either because you're in a trade that isn't inherently affected by it, or because your revenue isn't down, for example, or your profits aren't down. And if this is the case, but you are still eligible, I would suggest that you fill in those blank pages and you give them extra information. Because if I was a taxman, what I would do is I would run a report on people who've claimed it, who are in particular trades that shouldn't be affected, and run a report for people where their revenue and profit has not been affected. And then I would look at the additional comments, and given the number of tax returns, I wouldn't even guarantee they read it all, but I think if you've got something in that comments section which confirms why you have claimed the money that you've claimed, and that reason is compliant, then I think that's a really good starting point, and it will really help make sure that you don't get an investigation, because basically you're giving them the information in advance. Wait, really, unless it's an outrageous abuse, they're going to wait until January next year, January 2022, and if you have made a mistake, you need to have corrected it by January 2022. So in terms of how that works, then they'll get the software and get their inquiries, and they'll probably come through from summer 2022 maybe for the next 2 years. So the timing is quite surprisingly late, because you're claiming the money now and maybe in a few months' time, but you won't get investigation for a year or maybe 3 years. So the record keeping the ability to have that information, so you can collect the information and tell them what they need to know. It's important to have and keep that information because the time periods are lengthy. And then the other peculiarity of this is that for most self-employed people, they don't report quarterly. So some are VAT registered, in which case you're reporting every quarter, and what you're saying on your in terms of your business being affected should be consistent with your VAT returns. I think that's really clear, because they've got that information, they can compare it. But for most people, they're not VAT registered, so you're doing annual accounts, but it's a quarterly assessment as to whether your business has been affected. So therefore it's important to be able to understand how your business tracks quarter by quarter. For example, for a restaurant, it might be doing here now in May 2021, it might not be doing very well, and it might not be doing very well over the next few months, but then actually the second half of the tax year it might be booming. So you might actually end up with a really good year because you've got 6 months of feast and 6 months of famine, and the feast might overwhelm the famine. So it won't be obvious from your tax return that you suffered that famine initially, and that famine will very probably give you the eligibility for the grants. So that's something that where you'll be putting it on those blank sections of your tax return, and you'll be keeping those records so that you can show what and why you did. 5 different grants. So we're just sort of in May 2021 we're looking at the 4th grant, and then there'll be a 5th one later on in the year. And the way it's worked, as we've gone down them, the rules have been tightened up each time. So back this time last year, the first grant came out. It was done to very much mirror the furlough for employees, and at that time we were in a proper lockdown and very few people were actually working. So it wasn't very difficult to claim. I wouldn't say it was just free money, but it was not difficult to claim. The second one, you did have to be adversely affected, but it could be costs, so you could have additional costs. Well, everybody had additional costs, almost anyway, because we, had to buy hand sanitizer, masks, and put some shielding in, perhaps, and all that sort of thing. And at that time, all of that gear was expensive. So the second one, again, not particularly difficult. And then they started on the third one. They were looking at that you had to have your revenue had to be affected. So you had to be adversely affected, and it was your revenue that had to be affected. So saying that you just got the extra cost of complying with coronavirus was not sufficient. So on the 4th one, you're looking for a significant reduction. So if you have to have a significant reduction, and you have to be reasonable in your assessment. So they're expecting you to be honest and reasonable in your assessment. And I think if you're aggressive with them, they'll feel free to be aggressive with you. So they are looking for you to reasonably assess and say honestly that that you have had a significant reduction. And I think they give some examples which sort of show where they're coming from, and I'll just have a look at some of those. So they give an example of a cafe owner. So if you're a cafe owner and you're only able to do takeaway, and the volumes are very much less, as I think you'd normally expect, then in those circumstances, yes, you can comply. If you're if you're a plasterer and there isn't any plaster available, and you've looked around and you can't find anywhere else, then again you can apply. Or if you're a personal trainer and your gym has closed and you haven't been able to work in the same way, then you can see that your revenue's been affected, and they accept that as a reasonable thing. They give three examples of why you can claim, and then they give about 12 different examples of why you can't claim. So I think you can tell where they're coming from just from that statistic. But they're giving examples of a cafe owner where you've increased your prices, so your profit is the same. Well, in that case, you can't claim this 4th grant. If you're a plasterer, you couldn't get the materials from the normal supplier, but you managed to get them maybe a little bit more expensive. But overall, your profit's about the same. You did find them in the end. Then you cannot claim. If you're a hairdresser and you were closed, obviously for the closed businesses you can claim. But if you're like a mechanic and you were closed for a deep clean, but you managed to make up the volume overall, then that's not an unreasonable reason to claim the 4th grant. And again, if you're a builder and you had to self-isolate for 5 days, but your revenue overall was about the same, that would not be a reason to getting the fourth grant. And it gives an example. An electrician is still trading but has the increased costs of buying masks, cleaning supplies and screens, then they're not eligible for the fourth grant. So you can see where they're coming from, I think. There's an accountant, so there's a good example, it must be good. So an accountant reduces his activity because he wants to partially retire early. He reasonably believes that this will have a significant reduction in his profits, but he's not eligible for the fourth grant because he's doing it by reason of his retirement. And they also give a dog walker. A dog walker could replace the contract they've lost due to coronavirus, but chooses not to look for the extra work, and in that case you would not be eligible. Well, there is a whole list of them, so they're quite good fun if you're into that sort of thing and you want to have a good look. With the fifth one, for get the full grant, you need to prove 30% reduction in revenue, so it's a very specific amount. So I would suggest you keep the calculations for that 30% reduction if that's what you're claiming. Again, it won't be seen in your annual figures because it's a period of your year, not the whole year. So you could have a 30% reduction, but be up over the year as a whole, or only be 10% down for the year as a whole, but have that poor quarter. So it's again becoming more specific and more restricted. More generally, there are always rules for all of them that you can't earn more than £50,000 from your trade. Your trade must be more than half of your income, and you must have done your tax returns not quite on time, but more or less on time, I think is how I describe it. So there are other rules, but those are like the most important ones. So again, you've got to make sure you've complied with those. So how can I summarise this? Well, I think first of all there has been substantial help from these grants. They've got tighter as they've gone along. You need to keep good records. When you've reviewed your records as a result of finalising everything, and you realise you've claimed money that you shouldn't have done, pay it back by the end of January. Keep your records, fill in the blank parts of your tax return so that the revenue can understand what you've done. Be careful when you fill it in and make sure that what you're saying is consistent with the examples that the revenue have given. I've just given some of them. And just treat the money with respect, and I think that's what really the particular revenue are looking for, that you haven't just gone gung-ho at it, that you have honestly and carefully asked for the money when it's due to you. And my last point is about the record keeping. Just please keep records. Remember that you could be looking for many years into the future, so the better your information is, the better you'll be able to remember when in the future, or if in the future, you do have to prove that you were behaving honestly. Thank you for watching. Thank you for getting this far. This is part of a number of videos about tax and accounting. So if you would like to be kept up to date, then please subscribe to the channel. You will be very welcome. Press the like button because it really helps me and it helps the channel. And I'll be interested in seeing your comments. Either you can email me through the website, or you can put the comments in the comment section below. Thank you for watching.